Let's move on to Gokaldas exports. So first quarter numbers came through, and we'll talk about the numbers in a bit. But let's start, of course, with what's happening in Bangladesh and what the impact could be, implications could be for a company like Gokaldas. We have Sivaramkrishnan Ganapathi, Vice Chairman and Managing Director at Gokaldas Exports, now joining in. Siva, great to have you with us here. Good morning. Prashant this side.
Good morning.
As I said, Q1 in just a bit, but tell us what is the situation, because there's been so much talk about how, with textile mills in Bangladesh coming to a bit of a standstill, maybe temporary, buyers may be looking elsewhere and India stands to benefit. So is that a reasonable assumption to make? Is it actually happening? Tell us.
So we have to look at it from a little longer term perspective. In the short term, all the textile apparel factories have reopened and they've started. Most of them have reached some 90% of their productive capacity levels. So the disruption was there in Bangladesh, but they are coming back out of it pretty quickly. And that's because this industry is pretty critical for Bangladesh's success, and the government and everybody will work towards restoring that industry to its productive levels very quickly there. So the issue is different. The issue is, most of the brands have been worried about the volatility in Bangladesh for quite some time, and that reached a flashpoint a week ago. One never knows how things will evolve going forward. The only certainty is that there is instability and a lot of uncertainty. Given that scenario, there is a lot of pressure from certain brands to increase their allocation, outside of Bangladesh to regions like India, and that would happen. So it's not that Bangladesh is going to, suddenly sharply drop or anything at this moment, but there will be a more secular trend of looking at alternative locations just to de-risk many of their sourcing from Bangladesh. Commercially, most of the brands would love to source from Bangladesh, given their cost advantage, and especially Europeans, they would like the duty advantage as well. Having said all of that, nobody wants to take all the risks or put too many eggs in one basket. So from that perspective, most of the brands are seriously looking at some bit of diversification, and then they will wait and watch. So that's how I'm seeing this unfold over the near term.
But they were always looking at a bit of diversification, Siva, right? Or is that
they were
incrementally a little bit more now in terms of
that? That is correct. They were, particularly in the last 1 year. I've seen a lot of them look at diversifying outside of Bangladesh because people were reading this, and now this would get a little more fillip because of what has actually happened. The flashpoint has been reached, or the trigger has happened. So it would result in a little more, concerted, work towards moving things out of Bangladesh. Not a whole lot, but some bit. Even that some bit will be fairly big for us.
All right. Hi, Siva. Good morning, and always good to see you in. And I understand, with some feedback that a lot of top bureaucrats, army veterans, they hold most of those textile hubs over there. So that's why it's critical to get it up and running. So that's about Bangladesh. Let's keep that aside. Let's focus on your company. Growth has been good with a mid-teen growth. For the remainder of this year, what kind of a growth you're looking at? Since you have the inorganic growth as well that will play out. On a consolidated basis, should we stick with high teens, mid to high teens? Will that be a fair assessment? And also margins got pulled back because of the acquired entity. And also you had some, a higher employee cost and a couple of other expenditure. Will margins start improving? Should we see it in double digits by second quarter itself?
So I anticipate margins to improve from second half of this year, especially because we have some acquired entities where, there would be some moving parts. Q2 has been seasonally a weak quarter, not particularly for Gokaldas, but for the industry in general. So some of the acquired entities may still see some softness in Q2 on account of the seasonality when the season changes from fall, winter to spring, summer. But that said, I think from third quarter onwards, there's no looking back. Our growth will continue because we're seeing a fairly strong order book, and all our factories are full going forward. And we anticipate growth, as you said, in the mid-teens. So that would happen. The critical factor that we are working on is to bump up our margins. We had some one-off issues in Q1 as well. very marginal residual impact in Q2, but largely we have confined it to Q1, where we lost a lot of production capacity in April and May on account of huge amount of worker absenteeism, etc. But then we've recovered from there subsequently, and we've augmented our workforce also pretty strongly since then. So I see growth happening and margins catching up somewhere in the second half of this year.
So second half it gets back to double digits?
To double-digit levels. Two double-digit levels, absolutely.
11, 12%?
Closer to 11% perhaps, because we still have the acquired entities which may not be as profitable, at the high margins as we are. That would probably take FY26.
All right.
Yeah, FY26, the next financial year.
Siva, just the fundamentals of the business, exports to US, Europe, etc. What is it at? I mean, I think we spent the bulk of the last 6 months, 7 months, whenever we spoke, talking about this destocking coming to an end, etc. Where is it at? I mean, is momentum strong? Is it moderate? Is it expected to pick up?
Good question. Most of the destocking has happened. When I talk to all the brands that we work with, and which is most of the brands in the globe, big brands in the globe, they've all reached a stage where they're buying again. They've reached an optimal inventory levels, and they are back in the market buying. In fact, that's one of the reasons why we are seeing a fairly strong order traction as we speak. Even outerwear brands which were not really buying for more than a year have now started indicating that they have also reached an optimum optimum stocking level. So there is a more secular trend of buyers wanting to restock as the retail sales in those markets continue to grow. So even if you look at calendar year 2024, the last 6 or 7 months, you'll see that the retail sales is 3% higher than the same period calendar 23. So the end user demand is not seeing any abatement. There is a need for brands to stock up their inventory, and that's why they're coming and buying. Now, has the global demand supply reached a sort of equilibrium level? I would say no, since most of the brands are still being very cautious before extending themselves. They're also waiting and watching to see how their own economies will play out. But as far as Gokaldas is concerned, we have a fairly strong order traction simply because we have a very diversified customer base. And most of the customers that we have are, touchwood, doing exceedingly well. So they are coming in and sourcing more from us.
All right.
Okay. Yeah. We'll leave it at that. Thank you so much for joining in. And, have a great, rest of the year, Q2, Q3. We'll, of course, touch base with you again later.